NVIDIA Corp, NASDAQ NVDA, is currently trading at $181.96, down $3.85 or 2.07% today, Wednesday, January 14, 2026, as the market navigates a complex intersection of geopolitical shifts and high-stakes semiconductor policy. While the surface-level narrative suggests a simple intraday pullback, the reality beneath the ticker symbol tells a much more intricate story about how the world's most valuable chipmaker is being used as a pawn in a larger global chess match. Most investors looking at the screen right now see red and assume it is just typical volatility for a high-growth name, but the actual driver is a sudden two-sided squeeze involving both the United States and China that most retail traders haven't fully processed yet. We're seeing a rare moment where the expectation of a massive new revenue stream from China is being met with the reality of a two-key gatekeeping system that might actually slow down sales rather than accelerate them. This tension is creating a fascinating environment for anyone involved in self-investing or using an individual brokerage to manage their own capital. The general belief around the water cooler is that NVIDIA stock is an unstoppable force because the artificial intelligence hardware cycle is still in its early stages, especially with the Blackwell architecture now in full-scale production. People see names like Tesla stock or Apple stock and compare the growth trajectories, often concluding that NVIDIA has the clearest runway. However, the contrarian take that we need to address is whether the stock has become too sensitive to political headlines at the expense of its fundamental earnings power. When you look at your Fidelity mobile app or check your positions on the Robinhood app, it is easy to get lost in the daily percentage changes. But the real story today is the Department of Commerce opening the door for H200 chip exports to China, while Beijing simultaneously tells its own companies to slow down and prioritize homegrown alternatives. This creates a situation where the U.S. has said yes, but China is saying maybe, which effectively leaves billions in potential revenue hanging in the balance. It is this specific friction that is weighing on the price action today, forcing a re-evaluation of the short-term growth targets that many analysts had previously set in stone. If you are using Interactive Brokers trading or perhaps managing a portfolio through the SoFi trading platform, you have likely noticed that institutional activity has been surprisingly heavy on the sell side during these morning hours. This is not necessarily a sign of a long-term trend reversal, but rather a tactical repositioning. Large hedge funds and asset managers often use these policy shifts to harvest gains, especially after the massive run NVIDIA had throughout late 2025. The daily swings we are seeing, including that 2.07% drop, are a direct result of this institutional tug-of-war. We are also seeing a significant amount of sector-wide momentum shifts, as competitors like AMD and Micron are being viewed through a different lens today. For those who utilize Schwab Intelligent portfolios or other forms of online investing, these macro pressures can feel overwhelming, but they are essential to understand if you want to move beyond the basic headlines. The market expects total clarity, but the reality is that the semiconductor industry is now a front line for national security, and that means the volatility is a feature, not a bug. When it comes to the actual numbers, NVIDIA's recent earnings reactions have been nothing short of staggering, yet the stock remains under pressure today. In the most recent third quarter of fiscal 2026, the company reported a record revenue of $57 billion, which was up 62% from a year ago. That is a massive figure for a company of this size. Their data center revenue alone hit $51 billion. Yet even with these blockbuster numbers, the market is currently fixated on the export limitations. Think about that for a second. A company can grow its top line by 60% and still see its stock slide because investors are worried about a specific geographical slice of the market. This is where the psychology of expectation versus reality really hits home. The expectation was that a Trump-led administration would immediately clear the path for unrestricted sales to help the U.S. economy, but the reality is a 25% government cut on China sales and a complex case-by-case review process. This is why keeping an eye on your Fidelity brokerage account or checking the latest on the Robinhood Investments tab is so critical right now. The narrative is shifting from how much can they make to how much are they allowed to keep. I want to pause here for a second and get your take on something that is driving a lot of the debate in the trading community right now. Comment below how many shares of NVIDIA stock you currently hold and whether you think the new 25% government cut on China sales is a fair trade-off for getting back into that market. This kind of engagement is what helps us all stay sharp when we are navigating these waters through our own individual brokerage or using tools like SoFi Active Investing to make our moves. Moving into what the company actually does for those who might be newer to online investment strategies, NVIDIA is the undisputed king of the GPU. While they started in gaming, their business model is now almost entirely focused on being the backbone of the global AI infrastructure. They design the chips that allow companies to train large language models and run complex inference tasks. When you use the Fidelity trading platform or check your SoFi ETFs, you are likely seeing NVIDIA at the top of many holdings because their hardware is the gold standard. Their old reports from years ago showed a company struggling to move beyond the cyclical nature of the PC market, but that past performance is almost unrecognizable today. They have successfully transitioned into a platform company that provides not just hardware but the software stack, known as CUDA, that makes their chips indispensable. This is the moat that keeps competitors at bay, even as firms like Amazon and Google try to build their own custom silicon. The future outlook for NVIDIA is a classic case of high-stakes scenarios. On one hand, you have the catalyst of the Blackwell Ultra and the next-generation Rubin architecture, which are expected to drive even higher margins and revenue as we move deeper into 2026 and towards 2027. If the demand for AI compute remains as insatiable as it has been, the current price might look like a bargain a year from now. On the other hand, the risks are becoming more macro in nature. We have to consider the possibility of an AI infrastructure bubble, where the massive capital expenditures from big tech companies eventually slow down if they don't see a clear return on their investment. If that happens, the reality will fall far short of the current lofty expectations, and that is when we would see a much more significant correction than a 2% daily drop. Whether you are using Interactive Broker's platform for its deep technical tools or just starting out with investment help on more user-friendly investing sites, you have to be prepared for both paths. We are also seeing an interesting development in the way people are getting investment help through platforms like SoFi Robo-Advisor or other automated online investing services. These systems are increasingly being programmed to react to the same policy changes we are discussing, which can sometimes lead to cascading sell orders or buy orders that exacerbate the daily swings. For example, if a certain technical level is breached during the intraday session, these automated systems might dump shares of NVIDIA stock or Apple stock simultaneously, creating a broader market ripple. This is why the human element of analysis, understanding the nuances of a trade deal or a policy shift, is still so valuable. You can have all the Fidelity IRAs and Fidelity mutual funds in the world, but if you don't understand the why behind the movement, you are just a passenger on a very fast train. The current trading volume is also worth noting. We are seeing millions of shares changing hands every few minutes, indicating that there is a massive amount of liquidity and interest in this name. This is not a sleepy stock. It is the center of the financial universe right now. When you look at the Fidelity mobile app and see that NVIDIA is leading the volume charts, it tells you that the collective intelligence of the market is trying to price in these new developments in real time. The fact that the price is holding around the $182 level despite the negative headlines suggests there is still a strong buy-the-dip mentality among retail traders using the Robinhood app or engaging in Robinhood stock trading. There is a sense of fear of missing out that continues to provide a floor for the stock even when the news cycle turns sour. Looking at the broader sector, the momentum for semiconductors as a whole is being tested. We've seen other names in the space, like Intel or AMD, react to similar pressures. However, NVIDIA remains the bellwether. When NVIDIA sneezes, the whole tech sector catches a cold. This is why even if you are more focused on Tesla stock or you prefer the stability of Fidelity ETFs, you have to keep a close watch on NVDA. It is the lead horse in the race. If it starts to lose its footing because of these China restrictions, or because the U.S. government is taking a bigger slice of the pie, it could signal a broader cooling off for the entire growth-oriented market. This is